Well, it's been a roller coaster ride this week with stocks. Today, market's down quite a bit. Starting to rebound a little bit, came back down. The big fear is right here, according to what I've read. Regional banks, Jeffries shares tank as concern about sour loans grow on Wall Street. There's been a lot of loans that have been, not a lot, it's been a few lenders, some fraud involved that caused banks to fall. Even though one of the companies still reaffirmed its outlook, the comment from Jamie Dimon was, if you find one roach, there's probably a lot of roaches surrounding it somewhere. So the question is becoming, are companies and people becoming a risk on these loans that are being made? Remember, when money is easy and interest rates are low, it makes lending a lot easier. When lending is a lot easier to grow and grow your lending base, you've got to expand to outer rings. People are worse at borrowing. Is that happening here? I don't know. I haven't done enough research to realize that. Is there lurking things right here? Well, you guys remember a few years ago, we had the whole Silicon Valley Bank incident, and that should have been a much bigger deal than it was. But the US government stepped in, backed the loan up, everything was fine. That should have been a lot bigger deal than it was. Western Alliance alleged Thursday a borrower had committed fraud. This rattled investors despite the company saying it could reaffirm its guidance in 2025 outlook. While we are questioning why all these credit one-offs are seemingly occurring in a short period of time, the reality is that even though these exposures may be well contained and have limited financial impact, this is an industry where investors, especially those that are new to the sector, tend to sell first and ask questions later. Now, is this like the financial crisis? I have no idea. Because remember back then, everybody was coming out saying, everything's fine, don't worry. I'm not trying to make this a financial crisis thing. But if you believe that the economy is not as great as the numbers are showing or as people are thinking, then it would make sense that a lot of these loans that are going out there, especially loans that started during a very low interest rate period, would at some point cause a problem. We've seen a great increase in the amount of auto loans going out, credit cards loans going out, and then also defaults on those. That's the big thing here. Those are the things that make me go, wait a second. As you can tell in this chart right here, this is the delinquency rate on credit card loans. This is a 10-year chart for that. It's definitely Q3 2021, right before rates started to go up, started to increase. We're at 3.05%. Last 10 years is a high. Let's look at the max chart going back to 1992. So what's interesting is 1990s, it was pretty much 3% would have been the low that we saw. It would have been lower than the low for the 1990s, all the way actually until the great financial crisis. That's what's interesting here. So even though it's higher relative to the last 30 some years, it's not that high. Something to consider there. But interesting, if you look at the 10-year chart, it looks really bad. Take it out further, it doesn't look so bad. In fact, it still looks good. That's something to actually pay attention to here. This is only on credit cards. Now, here's some good news. This is the delinquency rate on single-family residential mortgages. Okay, this is a 10-year chart. We're still very low with no real, yeah, it's slightly going up from 1.7% in Q4 2023 to 1.79%. Marginal increase. Way lower than 2015. Look at this continued decrease in delinquency. Now, go to the max chart. Still low relative to history. So guys, this is the whole point about data. One data point can say this. You take a different relative time, it says this. It's all these differences here that I really want people to understand. That's why it's so hard to sit there and say, this is the absolute point of what's going on, right? We don't exactly know at any given time what exactly is going on. Now, like I said, the market is down. I saw this article on Market Watch through our software that I loved. Not every dip is a buying opportunity. I love this title because it says what I've always joked about. Whenever the market goes down 0.5%, I go, buy the dip. It's sarcastic. The reason I say that is just because there's something cheaper doesn't make it on sale. Doesn't make it a good value. The example I always give is, let's say you have a house that's worth $500,000. You could ask $5 million for it tomorrow. Doesn't sell, you ask $2.5 million. 50% cheaper, is it a good deal though? No, it's still 5 times more than it should be. That's why we teach on this channel, understanding how to value things, understanding what buying a good value means. Price and value are very different things. We want you to focus on when price is below value. That's what any good investor will do. And this is ultimately important when it comes to understanding how to invest money overall. We want you to be able to do this. Now, I didn't read this whole article. I just love the title so much. And I thought to myself, God, what a great thing to talk about. That buying the dip, it's worked for so long, for 15 years. So people think, well, it's going to continue working. Now, we do believe in dollar cost averaging. We do believe, and I preach that till I'm blue in the face, that you buy systematically at all times, no matter what's going on. Because in the long run, you're going to match the market no matter what happens. And that's what's really important. You'll outperform everybody. But that also includes making sure you don't stop because of fear. That's the biggest thing we always talk about. The fear is what's going to drive people nuts. Gold continues to skyrocket. It is up 60-some% since the start of this year. Guys, go look at our videos from years past. I started buying gold miners back in several years ago when gold was around 15 to 1700 per ounce. And the reason was back then that it cost about $900 to mine gold per ounce. And they were selling it for 15 to 1700, big margin. That margin's even bigger now. It costs 1500 to 1700 per ounce to mine gold, and look at the price right here, 4,300. Those gold miners are a great way to make a play on gold if you believe in investing in gold, because I don't believe owning gold itself is an investment. It doesn't fit my criteria for investment, but owning gold miners does qualify because these are businesses that generate cash flows, that have assets, and and as gold prices go up, they can generate more cash flows from it. I own GDX and GDXJ. I'm not telling anybody to do that. Do your own research. But if you're interested in gold and understanding how companies can make good money from it, this is one place to look, because gold is on a tear. And we've always said that the market is sideways or down for the next 5 or 10 years. Commodities tend to do very well. Gold, copper, silver, oil, things like that will tend to do well during sideways or down stock markets. So something to consider. I didn't really realize gold was up to 4,300 an ounce. This is absolutely incredible. Absolutely incredible. I can't believe how much it's skyrocketed as of late. Up over 60% year to date. That's a huge run. Now, the NASDAQ is up 55% since April 8th. Still a huge run for the NASDAQ, a very tech-heavy NASDAQ, up 55% in 6 months. That's a big number. I always tell people, be cautious. Doesn't mean you scare away and say things are falling apart. No, be cautious. There will be a time on this channel where people are telling me, Paul, you said things are undervalued and they still aren't going up. That's the way the investment world works. Are we overvalued? In my opinion, yes, we are. Does that mean we'll be overvalued forever? No. As price changes, your evaluation of the markets and your valuation of the markets will actually, your valuation will not change, but price versus value will change. And that's what's important. So guys, on this channel, we discuss earnings releases. We discuss all the news that's happening any given day. We just talk about day-to-day events. And we also analyze some companies and see what they're doing. Let's see what's going on in the markets today. Let's go to our Everything Money main page and see what are the biggest companies people are looking at. Apple, PayPal, Adobe, Sprouts Farmers Market, Lulu. Top gainers today. Okay. Top losers today. Oh, United Airlines. That's interesting. Capital One Financial. Interesting. KKR. All right. These are interesting things. Some big earnings releases that have happened today. U.S. Oh, yeah, all the banks. I said this earlier this week. We had a lot of banks reporting. What about next week? Let's see what's going on next week for earnings release. Ooh, a lot of earnings releases. Let me make this smaller so I can see more of it. Wow. Cleveland Cliffs. That's a local company. Coca-Cola. Boom. What else is reporting? Netflix. Oh, I'm excited to see Netflix. That'll be good. That's a company that keeps soaring. Tesla. Oh, big name next week. Tesla. That's interesting. Intel, Ford. Okay, next week's going to be a big week. So guys, highly encourage you, subscribe to this channel. Follow us. We're going to give you a lot of quick reactions where we sit there and we're the first ones to react to what's going on in the market. So make sure you do that. I appreciate your time. Subscribe to the channel. Take care.